Hello, everyone. You're welcome to this wonderful educational webinar, and where we'll be discussing about demand and supply zones. And of course, in this webinar, we'll be discussing about how to identify or spot a valid and invalid demand and supply zone. That is what we'll be strictly looking at in this particular webinar. Of course, the webinar is going to be divided into two sections. We're going to have section one today, and by next week, Tuesday, same time, we are also going to have section two of this webinar. Okay, because just to keep the time short so that we don't get bored staying much at a longer time online. All right, so just keep it short. So I don't want the particular webinar to stay beyond 1 hour, max less than 1 hour or max 1 hour. All right. So as a result, we're going to have two sections for this particular webinar. So we're going to have demand and supply zone part one today, and then next week we're going to have the part two today. So today we're going to actually discuss on how to identify valid demand zones and invalid demand and supply zones. All right. So without wasting much time, this particular webinar is brought to you by DB Investing, and DB Investing is a brokerage firm. It is one of the brokerage firms that has the top-notch platform to use to trade the financial market. And of course, you will agree with me that if you want to actualize your dream in the financial market and make successful trading, have a successful trading experience in the kind of broker or platform you use is of utmost importance. And DB Investing is one of the top-notch brokerage firms that you can use to actually actualize your dreams. Okay, I don't want to spend much time on talking about the brokerage firm because of the limitation of time. And so straight up, we're going to push down to our study. And I am no other person but the financial analyst for DB Investing Nigeria. So let's dive down into what we have for today. So straight up, let's look into our chart for today. We want to look at the chart for today, right? And see what we can actually come up with, all right? How to spot out this demand and supply, a valid demand and supply zone, because it's a practical class actually. It's something that we need to identify from the chart direct. Is that okay? Yes, we need to identify from the chart direct. Okay, so now let's see something here. First of all, if like this is, you can do this demand and supply zone stuff or zoning at any time frame, right? You can plot it in your 1 hour, 4 hours, daily, as the case may be, right? So we can do all of this, as the case may be, whether you want to put it in your 1 hour chart, you want to put it on your 4 hour chart, even if maybe 15-minute chart, okay? But of course, the higher the time frame, the stronger the zone. Is that okay? Yes, the higher the time frame, the stronger the zone. So if you're doing a top-down analysis, what is going to happen is that it is required that, okay, you start from that higher time frame, say daily 4 hours, then you come to a lower time frame to check for other minor zones. Okay, so if the market comes to a higher time frame demand or supply, so you know that will be a very strong support or resistance zone for you to begin to think of picking up a trade. So, but for today's class, just to keep it simple, we want to actually look at how to identify a valid demand zone and an invalid zone, a zone that will look at that it's no longer valid. For instance, looking at this particular chart, for instance, you can see that the chart moved from this point, drop down, is that okay? And then push on down to this particular high, drop, okay? Push on again, drop. Is that okay? And then eventually came down to this point and then push up again, drop, all right? And then look at, and then pushes on to this very high. So now the thing is, we want to identify which of these supply zone or demand zones are still valid. But meanwhile, what is a demand zone? A demand zone is where the bulls come in into the market or the buyers come in. All right. A demand zone, what we can use to look at say, okay, as a similarity to a demand zone is like it's a support level. Okay. So, for instance, this is a good zone to come in for a buy. Okay. For instance, here. So, the bulls came in here, they bought. Okay. Came in and they put on. Another area again, the bulls came in again. All right. The bulls are the ones that push the market upward, is here. Okay. But if we check out this point here, okay, they came in around here again, right? They came in around here again, right? All right. And so on. Is that okay? So if you look at in your normal concept of support and resistance, you will say these are support levels. Is that okay? Support levels, support levels. Okay. But there is a concept, demand and supply zones carries something, a much deeper concept other than just support and resistance zone. Okay. So we want to now check out how do we identify if that zone is a valid demand zone, okay? If that zone is not invalidated, all right? So that is what we want to look at. If that zone is not invalidated and if that zone is valid, okay? Now, let's begin to push on. Let's see something from here. Let's say we pick up this one, okay? Let's drag it down. Okay. We want to just check out something, pardon me. Okay, let's say we identify this zone, this is a valid zone. And the reason why we said it's a valid zone, simple, is because it has not been broken. By that we mean, we have not seen another market like this, maybe assuming if this one comes down, all right, comes down, this market comes down and go below that level, okay, then we can say this zone is broken. So this zone becomes invalid. Understand when we talk about valid and invalid zones. So that is what we want to really explain in this particular webinar for you to really catch what we mean by valid zones. So right now, we are looking at the current market situation that from here, if you push on down to all of this point, okay, the market hasn't come down to invalidate this zone. That is what I mean by that is that to come below this particular zone. Okay. So far as the market has not come below this zone is still valid. It's a valid demand zone. Okay. So we can capture all of this zone as a valid demand zone. All right. So let's look at it here. So that's a valid demand zone. Okay. So we can push it on. And so, okay, let's take it a little further to this point. So this is a valid demand zone. All right. Now, from this point, the market moved. Okay. The market moved from here, from this zone, which we will call our demand zone. You can call it, you can term it as D1 if you want to. And then the market pushed from there straight up to this point, came back, and then break this high. Okay. As it breaks this high, it went make another low here. You see that? Here. All right. At this point. So that becomes another demand zone where the buyers came into the market again. But let's just say, okay, maybe you don't want to look into that. You want to look at somewhere a bit more major. We can say, okay, it went up from here, but, okay, from here, push on to this high, okay, came, all right, came. Now, it made a low here, but this low was invalidated because this one came down, broke it, okay? So this low is no longer a valid demand zone anymore. It came again, push. This one broke this other low again. So this low is not longer valid anymore. It's an invalid zone, demand zone. And then it came down to this particular point and then put on. Is that okay? Now, looking at this now, you can see that the next valid point we have, if we don't want to pick up this other ones here, if you're just looking at a major retracement point, okay? Let's just say we are just looking at major retracement point where we want to look at, all right? If the next one we are going to pick up is this particular zone level, okay? So we are going to plot this other one, okay? Let's give it this one. All right. So here is another zone level. So you could see. So that's another valid zone, demand zone. Is that okay? Let's take it up and down, straight down to this point. Okay. So let's remove our drawings so I will see it very clear. Right? So now we have this point, right, as a valid demand zone. And then the buyers came in, pushed the market up to this level, right? And here they dropped down to this point because this particular point it has not been broken. Okay, by that we mean the market, if this market drops down and go below this zone, then this zone becomes invalid. Okay, that the liquidity sweep, and this zone becomes an invalid zone because it has been broken. All right. Yes, it becomes an invalid zone. But so for now, this zone is valid. This other zone is valid. Okay. And now let's look at the case of supply. Okay. Supply seems to be where the sellers come in. All right. Demand zone simply means where the buyers come into the market. Is that okay? All right. So now, if you watch very well, from this particular demand zone, we pushed on, okay, and gave this high, right? So this high actually becomes a supply zone. I'm coming, I'll explain. A supply zone. So from that point, the market started dropping, okay? Made another high. Is that okay? But this high it made, a lower high, and then, so here is another supply zone. So if we tag this point and then drop again, made another lower high here. So here's another supply zone. Just watch me, I'm coming. And then drop down. But you discover that from here, when this market has not made this move, okay? When this market has not made this move, these highs are valid highs. Is that okay? Are valid supply points, okay? But now the market now made a buy move from this the other demand zone and broke these highs. So they invalidated the whole of these highs that the market made. Okay? These lower highs that the market made. So as a result, the next supply zone that the market made was this one. Let me use my calculator. Was this one. After he made this one was the first one he made, but okay, and then it dropped down. Is that okay? But as he made this other move again upward, if you watch this upward movement, invalidated this one. So this one is no longer a supply zone, that is a valid supply zone anymore. So this becomes the valid supply zone as of when the market was here. Okay? Yes, as of when the market was here, this becomes the valid supply zone. Right? So the market dropped again, you can see, push, okay, and then made another lower high here, which is another kind of value supply zone as of when the market was here, dropped again. But on getting to this, our demand zone, it pushed up, came back, broke these highs, okay, until it get to a point that invalidated all of this. Is that okay? So all of these ones are no longer a valid supply zone anymore. So the valid supply zone currently now is from here, which we got to look at. So you understand the concept, how we zone this stuff about supply and demand zone. All right. So Because normally, if you are just using on the basis of maybe support and resistance, you will rule this point as a support level or resistance point. Okay, this is another resistance point. Yes, another resistance point. Right? No, but in zoning, supply and demand zoning, invalidation. Okay, this one is not longer relevant. So what is relevant now? The relevant supply zone currently now, because this particular market movement here has rendered all of these ones invalid. Okay, so all of these ones have become invalid. So this is the current valid zone right now. So we are going to draw a zone along this point here, which we will tag as our valid supply zone. Okay, so let's take off this. And then we come here again and do another valid, draw another valid zone here for now, because the market is at this spot. So let's see. Just hold on, let me shift chart. Okay, so let's take it off from here. Okay, so that's it. So this point becomes another valid zone that has not been broken, which we can call our supply level. Okay, so you could see now how we come about valid demand and supply zones in the market. Okay, yeah, valid demand and supply zones in the market, and you can see how we are running it. Is that okay? You can see how we are running it. Okay, so this is now a valid supply zone, because these other ones here, they are all broken. Okay, so this is what we have currently here as a valid supply zone. Now, if we want to draw other demand zones, so you could see that from here, you could see that the market is actually mounting more, there is more demand zones than supply, which gives us the idea that this is an uptrend. Okay, the market is actually mounting more buy pressure, more buy pressure, more buy pressure. Is that okay? Yes, we know that currently in the short term, gold is sold. Is that okay? But if we look at it in the long term, in the 1 hour, you see that there are more buy pressure than sell pressure. Do you get that? Yeah, there are more buy pressure. Looking at the demand zone, there is more of a demand layer than a supply layer. Okay, based on what we are seeing currently now in the chart. Okay, so you can see that there is a more buy pressure than a sell pressure. Now, let's still do some stuff. I love because these things are some technical stuff that you need to actually understand in the market to actually draw good valid zones. A time, let's say after next week, upper week, I will discuss about key levels, okay, how to identify key levels, so that when you are drawing these zones, okay, by the time you combine these demand and supply zones, okay, with the concept of key levels also, it gives you, so that when the market comes to a particular zone, you know that at this particular zone, there's a high probability of this market buying or this market selling from that zone. Is that okay? Yeah. So now let's look at another thing again. Okay. Now, if you watch, this point also seems to be a valid point. We had the buyers came in again here, another valid point. Okay. Okay, but I just decided that we'll just pick up points of major retracement. Is that okay? Yeah, point of major retracement. And then here again, but if you see this one here, this particular one here is already rendered invalid by this fall. Okay, so this is no longer a valid point again. Is that okay? Yeah, it's no longer a valid point again. So now, currently, this is where the market is, and at this particular juncture, we can say, okay, this point is only going to be a valid. Okay, it's for now. This is what we have currently, and so that's the market, where the market is currently now pushing up. So we can push on another one here again. Okay, from this point. Let's put another one here. Okay, Yeah. I think that one is fine. Okay, so we have another one here at this zone. Is that okay? Now, you can see that this another zone, demand zone that is formed. But if the market breaks this level, then this particular breaks this level, okay, goes on a little, and they come down, break this level, then this particular point is rendered invalid. Is that okay? So that is it now. So currently, this is what we're looking at. And of course, if you watch, this point also is a kind of a key level because it has been tested that both is a support and a resistant level. Okay. Yes, if you see the market came to this point, hit this point, drop, break it, come back, test it on it as a support. It came again to retest it again. So it seems to be like a key level in the 1 hour. Is that okay? Yes, a key level in the 1 hour. All right. So because a key level actually is majorly a point that has been tested as both a support and a resistant level. Okay, and that has been tested. So that's what we call key levels. Okay, there's some points actually in the market that have only been tested as support. There are some points actually in the market that have only been tested as a resistance, but there are also points that have been tested both as a support and a resistant level. So those are the points we look at majorly as key levels. Okay. Yeah, as key levels. All right, so this is it. So this market may actually move from here and then maybe go down and then take off this supply zone, okay, invalidate the supply zone and make another high again, probably. Okay, or you may make a lower high and then push down and then invalidate this other demand zone. So that's the concept of zones. All right, so that is how we kind of draw different zones. And of course, the zones seem to be stronger if the retracement is deep. All right. Yes, if the retracement is deeper, it seems to be stronger. All right. And again, I told us again that the zone seems to be stronger also with an it increase in higher time frame. That is at higher time frame. Like now we can go to the 1 hour. Okay, we can go to the 1 hour if we like. Sorry, maybe daily to draw some zones in the daily time frame. Is that okay? Yeah, we can draw some zones in the daily time frame and then come to the 1 hour so that another thing again. Okay, let's say you are taking a trade in 15 minutes. You want to take a trade in 15 minutes, but you want to only come in at a zone like a 1 hour zone. All right, before you come in for a buy. Let's just give it an example. I am doing my analysis in 1 hour. Okay, in other words, my zoning. I am doing my zoning in 1 hour time frame. Then I come to 15 minutes to take my trade. That is, if I do my zonings in 1 hour, then I come to 15 minutes to wait. When the market in 15 minutes come to my 1 hour zone, all right, and then gives me a kind of a reversible pattern or a continuation pattern, okay, any candlestick pattern, then I on that zone, then I take it. All right, so I am trading in 15 minutes but using 1 hour zones. Okay, I am trading in 1 hour, but using 4 hour zones. Okay, so because it is better to do it that way. So you do your zone at a higher time frame, and then come to lower time frame, you seek for opportunity for your entries. Is that okay? So that is how the concept is. That's how we run this concept. So now, like for this one now, one has done the zoning in what's it called? 1 hour. So I can go to 15 minutes to look for entries, and then based on this zone, we can know, okay, these are 1 hour zones. They seem to be strong. Okay, when I go to 15 minutes, if I see any reversal pattern, I can maybe scalp it and then get one or two some pips and get out of the market. Is that okay? So that's how we run it. Now, just running with zones alone, okay, just running with zones alone, it's not, because definitely now that I have plotted out my zones, I can now begin to look at other confirmations in terms of, let's just say, maybe moving averages, whatever the case may be, maybe other confirmations like, okay, so yes, so maybe a stochastic or maybe oscillator, just something to just confirm if the market is going to like look at this one. It came to this zone, okay. If this market is going to reverse from here and push this upward, okay, check for candlestick patterns or reversal patterns, okay. We'll look for oscillators, other oscillators have reached overbought or oversold at that particular point, just to validate that this zone is going to hold, okay. It's not going to be broken. All right, so these are the things we look at. So we trade at these zones. We come in for the market to buy, or to sell at a valid supply or demand zones. We don't just come in anywhere in the market. You know, a lot of guys just come into the market and they just say, okay, the market is moving, okay, it's going over, let's enter. No. A sound trader knows where to come into the market. It comes in at a zone, a demand zone or a supply zone. That point where the market is it a valid demand zone? That point where the market is it a valid supply zone? If it is, then it now looks at other confirmations. Okay, fine, it's at a valid supply zone. This zone, will it hold? How do you verify that this zone will hold? It's not going to be broken. You now use other conferences. You can look sometimes if the market comes to a zone, maybe a demand zone, and it is above the 200 moving average, most times it is very likely that that zone is going to hold. All right? Yes. And if the market maybe comes to a particular supply zone and the market is below the 200 moving average, okay, there's also that strong likelihood that that zone is going to hold. All right. Now, I'm not saying it's 100% sure, but just take note of that. So when you plot your demand and supply zone, another way you can help you verify, put in your 200 moving average. So whenever the market comes to that point, okay, where the 200 moving average, the market is maybe below the 200 moving average, and there's a supply zone below that 200 moving average, the market comes to that point, there is a likelihood that that particular zone will hold. That's the likelihood. That's an higher percentage that it will hold because it's under the 200 moving average. The same thing, like now, look at this particular demand zone. If we have our 200 moving average, let's say the 200 moving average is something like this here, okay? Okay, something like this now, all right? And then the market comes down, and then tested on this particular zone. There is a very strong likelihood that this particular zone will hold. Do you get that? Yes. So because why? The market hit on this point and is also above the 200 moving average. All right. So this point becomes a very strong confluence. So there's a likelihood that this zone is going to hold and then put up on the buy side. The same thing is also valid. Like if we look at it that if the market, let's say the 200 moving average is like this way, all right, that okay. And then this market comes in and then hit on the supplies level, all right? Maybe it's a previous supply level that has not been broken, and the market come to retest on it, and then 200 moving average just over it like this. There's a likelihood, there's a high percentage likelihood that this market is going to drop. Okay, but it's not every time accurate, it's not every time perfect, okay? But I'm just trying to tell you one of the ways to confirm, to validate that from that zone, this market will begin to spike up, or from that zone, this market is going to begin to spike down, all right? So that is what we have discussed, that's what we are talking about. So it's very key you understand all of this. So number one, knowing how to validate zones, draw a valid supply and a demand zone. And then number two, knowing what other instruments, okay, you can use to as a confluence to determine that from this zone level, the market is going to rise, okay? From this zone level, the market is going to fall, okay? Now, for instance, now I can use the 200 moving average and also use my stochastic oscillator, all right? Or my RSI. If the RSI is overbought too at this particular level, this thing is below the 50, or what's it called, the 200 moving average, and it's at this zone. These are confluences. That's how we reason the market. That's how we think the market. So from this point, we can think of coming shorting this market. Why? Because at this particular point, this is a valid supply zone, okay? Or this is valid supply zone. Two, the moving average is above it, all right? And three, our stochastic is also overbought at that particular point, or RSI is also overbought at that particular point. So these are confluences we'll look into before we take a trading decision. So it's key. So trading basically is, you don't just come anywhere, like I've earlier said, in the market. You look at where exactly to come in the market, your zoning. So if you don't know zones or valid zone, then that's going to be a major problem for you come into a valid point where you can begin to make profit. Some of us are coming to the market at let's just give an example. The market has been going for a buy. Now this is actually a very valid supply zone, or let's say it is coming for a sell right now. Okay, the market selling, and then it made this move and it came to this point, and then you look at it and say, okay, come in, sell. Meanwhile, let's say our 200 moving average is this way, okay, like this. This is a valid supply, a demand zone that has not been broken, and then you came in here for a sell. and then the market just did a little spike downwards a little, and then begin to push up again. You're going to say, this market is going against me because you bought at the wrong place. Sorry, you sold at the wrong place. Okay? This point here, there is a valid demand zone that has not been broken. So you don't sell at this point. You wait for this zone to be broken first before you begin to think about sell. Is that okay? So if I'm going to short this market, I have to patiently wait for this zone to be broken. When this zone is broken, and probably even below my 200 moving average, then I can begin to think about shorting this market. Is that okay? So that's the concept. So you now know where to buy a particular trade, and then where either to sell a particular trade. Let's just do maybe one more. All right. Let's look at 4 hours, for instance. Let's look at the timing. Let's see, maybe in 4 hours may have more. This 60. 4 hours we have 240. So let's see 240. Let's see. Okay, so this is 4 hours, right? So let's look at it. Now you can see this point here. Now, if we want to check out this, we can still draw more zones here, but this is the current market situation. This 1 hour, this 4 hours, you can see. So these zones are still valid. If we look at it in the 4 hours, I see points in the 4 hours, all right? So now if you drop down, you can see that we can still draw more zones, all right? Like here, like I've earlier said, it comes in from here. This zone is still valid. It has not been broken. Pushes on, valid, okay, not been broken. Goes on to this point. This demand zone is valid, not be broken. It comes here, here, here. All of these ones are broken, but this is the valid one here that has not been broken. And then the market puts up from there to this point again. Okay, so these are valid points. This, all right, and then this. So you could see that the market is just doing, there's a buy pressure, all right, buy pressure. So in fact, based on this buy pressure, one may anticipate that this, look, gold might still push on again. Okay, because there's a buy pressure in the market because of there are more demand zones than supply. In fact, currently this is based on this our current market now that we are looking at from here. Okay, this is the only valid supply zone we have here right now. All other supply zones are broken. So the market is still having a very strong buy pressure. Okay, still going up, still going up, still going up. Is that okay? So that is how we try to look at the concept of validating a zone, a supply zone, or a demand zone. Okay, I guess this lecture is very clear. So you on your own now. So for those of us who are actually drawing supply, support and resistance, this will add to your way you draw your support and resistance. You can shift a little to rather than just drawing support and resistance to drawing zones, okay? Demand, supply zones, okay? And then capture those zones and just put them in there. Is that okay? Yeah, so capture those zones and then put them in there. Okay, so we're going to discuss more about it. This is just, let me look at it. Okay, this is just trying to bring in that initiative or that concept of the zoning we are talking about. Okay, yes, that zoning we are talking about, and so that you understand how this zoning works and how we look at it and how we render a particular point that it is valid or not valid. So that is it about today's class. Okay, I don't want to go further than that because the next is I want to begin to look at the different characteristics of these zones. For a supply zone, there we'll begin to talk about the rally, base rally, and all of those stuff. That we'll talk in our next class. Okay, where we'll begin to talk about the characteristics of these zones. Okay, how you will now identify it, their behavior. Okay, all right, rally base drop. Okay, and the rest of them, all of these base, and then rally drop base rally, and so all of these different types we are going to be looking at, and then their characteristics. And then after we have done that, they will now look at the practical situation, probably how we can apply it in the market. Okay, so this is going to help your trading decision and how you actually determine and look at the market. All right, guys, so this is what we are going to actually we are going to call it a day for this particular class. And I guess this particular webinar makes sense to you on identifying zones, okay, how to determine demand and supply. So like I've earlier said, that the demand and supply zone also looks like our conventional support and resistance levels. Is that okay? But just that this is a bit deeper than the normal conventional support and resistance levels. All right, thank you so very much, guys, for joining this wonderful webinar. And I guess you learned something, even for those of us who are already professionals in the market, but I guess the webinar is a bit insightful, actually insightful, and it has opened your eyes to maybe one or two things. Maybe you never thought about it or looked at it in that way before, all right? And maybe how to use it to draw confluences, okay? Like as I talk about, you are looking at the moving average 200. If the zone is below the moving average 200, and then the market comes to that zone, could be a higher probability that market is going to sell from that zone. So these are the stuff. So thank you so very much for joining us. I wish you a peaceful day, and then and a wonderful trading pursuit as you still stick on to us. This is no other brokerage firm that bringing this webinar to you other than DB Investing. Thank you and bye-bye.